All right, everyone. So I'm gonna break down my play today that I alerted. It was the SPX 4120 call. My alert, which I'm gonna pull up the entry slip right now once I get that clicked. So I entered the position at 1.8 a contract. I got four of them, and the screenshot I'm showing is Central Time. So Eastern wise, I entered at 12:21. And I'm now gonna take this down just so it's a little loose. So going off the left side chart, that is actually the SPX actual index chart. The right side is the 4120 call chart setup. So just going off the two visuals right now, I'm on the 1 minute for both. I'm going to briefly explain off the 1 minute why I did enter where I did. The entry point, I highlighted yellow on both, so you can find the correlation on each side. I added the horizontal line on the SPX side just so you know the entry was 1.8 and you can see how low the contract went on the dip. And I'll actually add a line right there so you see how low the contract went after I did fill. So just going off the 1 minute visual right now, the entry point on the contract on the right side was 1.8. The actual time was 11:21 and I think a few seconds. Central time 11:21 and 3 seconds. Obviously, if you go off the 11:21 candle, you're not going to see the 1.8 fill. So it's always going to be like the next candle forming in the minute for the 11:21. I mean the 11:22. So if you ever review your trades off the option contract chart, you're always going to notice that it doesn't fill on the actual 11:21 candle. It goes off the seconds after. So the candle filling was the 11:22, since 11:21 to 11:22 was the actual candle that I filled in. So I entered at 1.8, contract dropped to 1.65 at the low. And if you correlate that with the actual SPX chart, same thing as before, 11:22 candle Central Time is where I entered. The only pullback that actually happened with the reason why the contract dropped 0.15 after entry was obviously this little wick down on this green candle. That slight move on the downside is what brought the contract down 0.15. Now I'm going to break down exactly why I entered off the 1 minute just to give you guys a good visual. I was looking at this trend off the 1 minute. I wasn't really focused on the bigger trend I have right here. I was more so looking at, okay, higher lows are forming on the smaller frames. We had low on the day form right here. I had a level at 40.88. We obviously did not touch it, but since we pulled upside after barely grazing the 40.88 level, I was waiting for higher lows to form on the 1 minute. I don't trade the 1 minute. I use it for confirmation before switching to the 5 minute after my entry. I always try and enter SPX on the 1 minute when I'm trying to find a bottom or find that trend reversal. The smaller frame wise, I saw the higher lows forming. I also saw the higher highs forming. When I saw this lower high form just before the dip, I wanted to try and catch a double bottom with the previous higher low. So I tried to find a rough area of a contract price, which obviously that was this area right here on the right side, which was a low of 1.8. I was expecting a double bottom on the contract, not the actual stock. So I just wanted to fill 1.8, knowing that if I do keep dropping on the contract side, my risk would be obviously watching these candles of the higher lows form previously. I alerted in the Discord and said my stop loss would be 1.00. The reason I said that was just so people had an idea. I am willing to hold this contract if it continues to drop after my entry. Obviously, the entry was solid. The low after entry was 1.65, and that was actually the lowest the contract went until the end of the day sell off, obviously, since we did not close in the money. So after the entry, I get the price I wanted at 1.8, and that's when SPX respectfully held this rising trend. The support trend of higher lows was forming. It bounced amazing off where I wanted, roughly on the SPX chart. The contract had a slight dip. I was not worried though. My stop loss was 1.00. Obviously, the low on the contract for the day was 1.3, which was also the low on the day for the overall SPX. So once the actual chart of SPX started to push on the 1 minute, that's when I switched to the 5 and the 15. And the reasoning behind me waiting after I entered, I'm looking at the overall trend now. And that's where the actual rising wedge comes into play off of the 5 and the 15 minute with these lines. I was using, don't know why that popped up. I was using the overall wicks that were being bought up. If you guys know this with learning candlesticks or anything that you do watch with learning charts, learning patterns, learning candle formations, when you have candles on the larger frames with heavy wicks with a fill candle on the top, that shows buying pressure. In that 5-minute interval, the stock dropped, but it pulled back off buying pressure, showing that every time we dip, people are buying whatever you're watching, the stock, the index, whatever it is. Obviously, with this example, it was SPX. So once I switched to the 5-minute, my entry point was obviously the 11:21 in a few seconds, which was at the bottom right here. Let me make that yellow again. So after my entry, obviously we pushed amazing. Right away, my contract broke upside and it hit basically 200 a contract within the first 3 to 4 minutes. At that point, I'm up $20 per contract. The low on the contract after entry was a 0.15 drop. So right away, my risk to reward from what I had to hold in red to what I was currently up, I was content with the fact that my risk to reward is in my favor right now. And using that indication on the actual option chart, I'm looking at SPX now, and I'm just using the levels that I charted to break upside. First level of contest was obviously on the 5-minute. It was the reject right here. And I'm going to make this white now just so it is easy for me to move and you guys can see better. So after we hit low on the day and we pulled back, you're using the first higher low based off the quote unquote low on the day. Obviously, the low can keep forming. So you're going off visuals. If you look at the 5 minutes since open, there was no green candle. There's a little one right here. I don't care about that. Oh, that was actually pre-market. My bad. That was 9 o'clock. So after market open at 9:30. Oh, wait, this is central. Let me think. Someone help me out there. Okay, here's market open. My bad. Central. I'm an hour behind out here. So market open was here. There was one slight green candle, but we had all red practically on the 5-minute. So when I start seeing 5-minute candles on the green side form like this, 3 back-to-back, 2 back-to-back, one heavy green candle on the 5-minute, right away my mindset is this could be a higher high forming off the low on the day. So trends are starting to form. Pull back, push back on the low on the day. Right away, I'm looking for a pullback for higher lows. We have the first low on the day being at this point right here. Obviously, the 40.88 area. The actual low was like 40.89.7 area. I want to see that hold for a higher low. So at that point, as I'm watching this, we have the first higher high forming based off low on the day. Now I'm watching for the next higher low to form anywhere above the previous low. Once that forms on the 5-minute, that's when I know I can watch this on the 1-minute for an entry point. The larger frames are holding. I want to snipe this on the smaller frames and get my solid entry based off what I see forming in the moment. And that's when I saw heavy consolidation in this zone right here. This heavy consolidation, I'm noticing, okay, people are buying it on the 1-minute. We're holding, obviously a higher low is forming. My lowest risk is catching this on the support of this rising wedge kind. It's a very small rising wedge, but I want to catch it as low as possible. When I see the higher lows form, I want to try and catch it either at a double bottom with the previous higher low or slightly above that for another higher low forming. If this did break on the downside, obviously, I told everyone my risk of a stop loss was 1.00, which is $80 a contract loss. You can sell this at any point once it breaks down out of this wedge right here. If we broke the 40.95 area, 40.96, you could sell there. The contract would probably be like 1.4, 1.3 area. So you're risking right there about $60 per contract. For me, watching the 5-minute, not just the one, scroll back every time. When I'm watching this on the 5-minute, I'm noticing these wicks being bought up. Every time it pulled on the 5-minute to the downside, buyers kept it up and candles were going green back to back to back. My entry point were these 2 wicks on the bottom practically. That was my support. So watching this on the 5-minute, once we held and we bounced after my entry, I want to see the previous higher high break on the upside to make trends go bullish. Once that trend broke, at this point, we're zoning in a wedge upside. We're pushing upside. There was no heavy pullback until basically high of the day formed on the contract, not the actual SPX because we were super red. But once this high happened around this area, All I want to see is a pullback and hold higher above the previous high, the higher high that formed. At this point, the contract that I was in, it was roughly up almost, I mean, it hit a high of 9.00. Along the way, this is what I'll start to break down now, is why I sold the way I did, if there even was a reason as the chart set up why I sold. I was focused on trends are holding on the 5-minute. I rarely see any red candles. When we contested the previous higher high at the 41.05 level, we broke through. Obviously, we held, but when we broke on the upside, we pulled back and we held at that zone for basically 2 full 5-minute candles before we had a major push on that next 5-minute green. When that green candle flipped, I'm right away looking at the next level I have, 41.09. The reason I found the 41.09 was the heavy consolidation that was forming off of a 15-minute interval. 3 5-minute candles were trying to hold right here. So I'm focused on these wicks, these fills previously to use in the moment as the stock reverses to the upside. Anything that hesitates on the downside, if it recontests on the upside, it will show weakness and maybe even sell off again with the respect to the price action. So once that breakout happened above the previous higher high here, I'm looking for a pullback to hold the 41.04 area now, 41.05 area. If that holds, I'm not even thinking about selling my contract. So if we correlate this zone, which was roughly 11:50 Central Time, that's right around this area. Let me find, there we go. That's around this area right here. Now you're probably thinking, where was that huge sell-off at 12 o'clock East Central Time? That's actually 1 o'clock Eastern. So 12 o'clock Central, I'm going to switch back to the 1 minute on SPX just to find the actual reasoning why that had a heavy pullback and it dropped so much on the contract. This was the pullback we had. After we broke out of the 41.04 area, we pushed to my next level, which was 41.09, and we pulled right back, showed strength on the 41.04. On the 5-minute interval that I just showed with the candles for SPX, it was literally a green candle that dropped and pushed back up. So you didn't see a red candle here. This pullback is what made the contract drop in price with a high of almost 320 back down to 190 practically. I am not selling though. Could I have trimmed on the way up? Yes, but I'm looking at the trends on SPX. I'm not focused on I was up this much on the contract, now I'm down this much. I sized for zero like I alerted. When I alerted this contract, I literally told everyone, high risk, I'm entering SPX at 41.20 call. My limit is at 1.8. I'm sized for zero. If I do stop out, my stop loss is 1.00 to reduce risk. That risk per contract was $80. So if you size one contract and follow what I would have said, you'd be risking $80 on an $180 contract. Luckily, that stop loss never came close. It held. And once that pullback happened, we're on the 1 minute still. We held respectfully the 41.04 area, 41.05 zone. So when that bounced up, the contract gained that value back. And at this point, I'm not looking at the contract price. I'm focused on, okay, we held the 41.05 area. I want to see us break the 41.09 now. I want to see a higher high form. Once we broke upside above that, we pulled back twice, but we held that zone. Obviously, we wicked below, but if you correlate the times, once again, this was 12:16 Central. 12:16 Central on the actual contract premium, it only dropped down to 250. So from my 245, my bad. The low on that drop was 245. So going off my entry, I'm still up $65 a contract. That's over 50%, and I'm still up on that slight pullback. We are holding trends. So I'm not interested in selling still. If we would have pulled back through the 41.09 heavy and contested the 41.05 area again, I may have considered selling only because a pullback that heavy, we would have dropped below 190 a contract. So I would have been in the red at that point. Do I want to raise my stop loss? Do I want to readjust? I was still focused on trends holding. I was prepared for the drop off if it happened. But since trends held and that 41.09 didn't break heavy, we pushed right back up. So at that point, I'm looking for, okay, my next zone's 41.12, 41.13 area. Can we break that? And if we do break it and pull back, can we hold that zone? Sure enough, at 12:30 Central, that was where my first sell was. That break above 41.13 area was my first sell at roughly 360 a contract. That was my first trim at 100% gains. I was playing my levels on the chart. when the push was forming at 12.23, 12.24, 12.25, that's where the contract was roughly $3 a piece. If I knew this push was going to happen, well, not if I knew, I was expecting the move to push higher to at least my 41.13 area. When it did cross, the contract was showing momentum. I wanted to try and catch a wick upside to fill me at 100% gains. I could have put a limit at 3.2, 3.3, 3.4, but I wanted to get mostly a selfish indication of myself. I wanted to get an 100% trim, and I knew if we broke this level heavy, we could wick upside on SPX and the contract would easily fill me at 3.6. And sure enough, my first sell at 3.6 hit. On the pullback after the breakout of the 41.13 level, we wicked below the zone, but we still held strong enough to not scare me out of my rest of my position. If I wanted to at this point, I could have raised my stop loss from 1.0 to actually break even at 1.8. So at that point, if you had two contracts and you sold one at 100% and the last runner you had to break even, you are guaranteed $180 on this position. If you size three contracts, you sold two at 100%, you have one runner left with a stop loss at break even, you just locked in $360 on a three contract size position. When this pullback happened, the contract only dropped to 3.1. So even if you put a stop loss at 20%, 30%, you're not getting stopped out of this position because on SPX, the trends are still holding. You're still making higher lows on the 1 minute, and on the 5 minute, it's still holding with a, like it's holding the trends. The correlation, the continuation on the 5 minute showed no signs of weakness. Look at this. We're on the 5 minute right now. There was no signs of weakness. There was no heavy pullbacks. Every pullback in the moment for the 5 minute candle got bought up. I was not scared watching the 5 minute. If I was watching the 1 minute, this pullback right here may have scared me out. But on the 5 minute, that dip got bought up and it finished green on that candle. It dropped $2 on SPX, but it finished green in that interval in 5 minutes. As this kept pushing, contracts holding, we're getting closer to in the money. Once that level of the 41.13 held and broke above, we're basically one slot out of the money once 41.15 on SPX hits. Once the closer we are to in the money, the more the contract will hold on pullbacks. I was not worried at this point. I had a few runners left. As we're pushing, I'm just basically watching this to see like how high can this go. As it was approaching, I'm going to switch back to the 1 minute just so the premium contract chart correlates well with SPX. As we're pushing and holding 41.12 area, 41.13, I'm watching the contract price as this slightly moves up on the 1 minute or the 5 minute, whichever I'm watching. So around 12:40 Central Time, the contract was 413 a piece rough. Oh, that's 40. Hang on. Yeah, 12:40 Central. Contract was roughly 430 a piece. So I'm up just under, would that be $260 a contract, roughly $270 a contract. At this point, I'm still seeing strength. Where do I want to trim? Where am I looking at for this to keep going? Psychologically, I'm focused on a tap out would be roughly 41.20, which is my in the money contract. So I'm going off psychological rejects now. Like I'm trying to think like a hedge fund. I'm trying to think like a market maker. Where should I sell off the price action to make retail think if this breaks this specific price action level, it could keep going? My mindset was if 41.20 touches, that may be a good place to sell because that's a logical psychological reject. Logically thinking, retail sees 41.20 break on SPX, they want to chase calls. Oh, this is going to go to 41.30. So as this moves up around 12.50 area, 12.49, I'm focused on, okay, price action is roughly about 500 a contract. If we wick up heavy to the 41.20, I can at least get filled at 200% a contract, which is 5.4. So I put a limit in for two contracts at 5.4. Sure enough, once this actual price action started to gap up heavy on the 1 minute, the contract's getting closer to in the money. The premiums are flying. The IV's on my side. So my limit at 5.4 got ate up, and within 2 minutes, the contract's up another $100 already. So this is when, for me, it was all personal biased. I could have sold the last contract at any point. I could have sold it 7, 8, 9. I only raised my stop loss to 2.1. So my stop loss was basically a 16 to 15% gain if we pulled back. A lot of people would say, well, why didn't you sell? Why weren't you happy with that? I was already up extremely well in the day. I would rather hold for more than just sell all of them at 5.4 and see it keep running. At this point with SPX, you don't know how much higher this can go. Psychologically, my reject was 41.20. So when we touched 41.20 on SPX, which was around 12.53 or 12.50, 12.52 area, I could have sold the contract at 12.52 and it would have been roughly 700 a contract. Other people, they would have done that. I could have done that, but looking back, I'm not upset that I kept holding and my stop loss did end up hitting at 2.1. If you look at the contract, they wicked me out at the bottom. My stop loss, let me pull that back up, the entry slip, I got stopped out at 2.1 on my last runner. Was I upset? No, because I initially told everyone my limit to sell was 10.00. I wanted 1,000 a contract. It never touched. If we somehow got wicked to sell at the high of the day, we would have been out at 10.00 and I would have been fine with that. But since we did not hit my initial conviction, I told everyone I wanted 10.00. It didn't happen. I'm not going to sell the contract at a pullback at 6, at 5, at 4, at 3. I'm sticking to my own word so that I continue to trust myself moving forward. When I say something, I don't change my mind because I see red candles. I see a heavy reject and I miss my sell by 1.0. I'm going to stick to my word. And if the pullback does happen, say we would have pulled back to this 3.6, which on SPX, that was roughly right here, my 41.13 zone, basically. Say we would have bounced here and then went back to high of the day. If I would have sold that contract at like 5 a contract, 4 a contract, because I was scared, imagine how I would have felt if this would have ran to 10 on this bounce. Obviously, the bounce didn't happen, but I'm always thinking mentally over actual money I want to secure. If this pullback would have happened after I sold out a scare, like a scare tactic right here, where I put this highlight, if it would have pulled back upside to 10 a contract, I would have been so upset with myself. I'm more content knowing I got stopped out at the low on the day because I told everyone that was my plan. I'd rather hold this to 2.1 than sell this early and not catch the 10 if it did pull back. Sure enough, high of the day only touched 8.5 after the initial high for the contract. And obviously, I was not upset. If I would have got filled on this and it ran the 10, I may have been questioning, like, why did that happen? Why did I get filled at the very bottom on the day? But I'm not too upset over what happened. So overall, just to recap this, and I'll take any questions you guys may have, going off the 1 minute for SPX, my entry point, I was waiting for consolidation. I was waiting for this chart to show strength. I didn't want to rush anything. When you're looking at the premium for the 41.20, notice how if you would have chased this breakout, oh geez, wrong side, hang on. If you would have chased this breakout on SPX, the high of the contract was 3.4 area. Say you would have bought this contract. I'm going to show you why I never chase, like, oh, this is the bottom, I got to get in. The reason I never chase, say you would have entered this at this price right here. The time frame central time, let's say 10:40, you enter these calls. So 10:40 you enter, 10:40 on the contract would have been roughly right in this zone. It was roughly 210 a piece, 220 a piece. Imagine buying that, seeing it push, and you're like, I want more, I want more. And then it pulls back. Me waiting like I did, my entry was better, even though the price of SPX was higher than where you entered. I entered at the yellow highlight, you chasing, quote unquote, this is the bottom I have to get in. This purple highlight is literally $2 lower, but my contract I got in at was at 1.8. Your entry would have been 2.1, 2.15. So I'm always waiting for the formation. I'm not worried about catching what could be the bottom. And say this did keep pushing upside, it never pulled back. I don't trade. It's that simple. I would rather wait for a better setup where I know, okay, if I enter at this yellow highlight, my risk is going to be yada, yada, yada. If I enter at this purple and say we push another $4, then reject, where am I going to sell this? Am I going to sell it low on the day? Can I hold this contract down $100 a contract? Entry's 1.25, low on the day is 1.3. So I'm always thinking, do I want to wait? Do I just not want to play this? I'm never in a rush. Even though I got in off SPX at a more expensive price per share, my contract was still cheaper. And look at this consolidation. Shoot, I moved that a little bit. Going off the highlight that I'm about to do once I get this. There we go. Going off the highlight, I knew there was heavy buying pressure around 1.65 at the low. So if I entered 1.8, I could have sold right away if SPX actually rejected and dropped lower, I could have sold at 1.5, 1.4. So my risk, if you look at this, where's the safer risk? Where's the safer play to enter? So you know visually, okay, if I enter here, it's looking strong. I see trends forming on the 1 minute with SPX. I can visually see that we're gaining buying pressure. When you play where the purple highlight is right now, when do you know when to sell? When do you know if it's going to pull back? I'd rather wait for a pullback and to see more buying pressure and higher lows form. I'm not focused on catching the move. I'd rather wait. So going off what I've just talked about, do you guys have any questions? Anything else you want to see? Any like what made you enter even though it was at low on the day? So drop any questions you guys may have, any thoughts, any like what can I do to gain this mindset of waiting? How do I know when it's going to actually form a buying curl and show me strength on the upside? No question is wrong, so ask whatever you feel. This could have failed. The trade could have failed. It worked out because I was just waiting for the risk to be in my favor. I didn't want to chase this bottom. Even though SPX pushed roughly $13 upside, I didn't want to chase that push because I know the IV is going to spike. If it does pull back, I can get in at a cheaper price. How do I know it's going to reverse? So that's the thing with trading. No trade is for sure. No gain is 100% going to happen. The reason I knew with probability in my favor, when you're looking at this setup, you see the price action rising. Every dip is getting bought and it's rising with price action. So I could have entered, obviously, I could have entered here. I could have entered here. I could have entered here. I was waiting for more confirmation with higher lows to form and also to see the support trend hold. I could have waited all day for this to go, but after this initial drop, I just wanted to get in. I had basically 4 confirmations beforehand. If you don't include the first higher low that formed, 1, 2, 3, the 4th entry is what I wanted. So if this 4th one wouldn't have held, I could have sold at any point. Hang on, I'm trying to get this to extend. I could have sold at any point where this white highlight is. Any point I could have sold. If this low on the day, the low on the trend right here would have broke, and I'll make this color purple. This is like the absolute lowest you should hold a contract off of this type of setup. If this would have broke, you're basically making lower lows at that point. The higher low that formed here compared to low on the day, if that breaks, trends are reversing back to bearish. My risk where I entered was the best possible in my personal opinion. I could have filled at 1.65. Yes, I get that. But you're never going to fill at the bottom. You're never going to fill for a sell at the top. You just want to enter where your risk is minimal and you have control over what is possibly going to happen. When I entered this contract, there was no IV. There was no spike on anything on the downside. It was holding well on the contract along with the rising wedge forming. So when this breakout finally hit, I was safe just to hold this contract and let the chart speak for me. I was not worried when we had red candles. I was not worried when this pullback happened. Because when this pullback happened on the actual option premium, we still held my level of the 4105 area, 4104. That held perfect and it bounced. I was not worried about selling. So at that point, when I enter off low risk, I'm just watching the chart and letting the chart give me my conviction. I'm not focused on, oh, I was up 80%. Now I'm only up 10%. Are you using the 1 minute here because it's a short-term play? I know you typically don't. I know you typically say you don't use the 1 minute at all. So the reason I have the 1 minute on is because for new traders, they can visually see the trends forming. If I switch to the 5 minute or the 15, with how much experience I've had in the market, I can see the trends holding and I know what these wicks are doing. I know these wicks are showing me on the 1 minute, we pull back and we push back upside. On the 5 minute, I can easily see trends holding right here. So I basically had the 1 minute pulled up so you guys can see visually how the trends held. On the 5 minute, I see these trends. If I switch to the 15 minute, once I go back to this, on the 15 minute, this is literally like, once I entered, come on, there we go. Once I entered on the 15, every candle was green. Until I saw a red candle, I was not going to sell this. And when I say red candle, I'm saying a closed red candle. Obviously, in this 15-minute interval, there was a red candle in the motion of forming, but it did not close red. So when I'm looking at this after entry, 5 minute wise, I can see these trends and not have to worry. If you guys don't realize this, Let me do the poly. There it is. We're pulling back, but we're curling, we're holding. Dips are getting bought. Dips are getting bought. Now we're pushing upside. If you can't see that on the actual, why is it not deleting? If you can't see this on the 5 minute, the 1 minute is the reason I had that pulled up, because it's a lot easier for new traders to visually see trends are pushing upside. And looking at it this way, it should be a lot more visual for you to see how the upside was forming. For me, the 5 minute was all I needed. When I saw those wicks getting bought up on every pullback, I was not worried about holding this much longer. Every pullback, I was not scared of selling. I knew I was going to keep holding this. Seeing these wicks be bought up, it showed me buying pressure. Does that make sense? It's not, and going back to Millie, it's not like, oh, I knew this was going to reverse. My risk was minimal. That's how trading has to be. If you treat trading like I have to get in, I have to get in. I treat it like if I enter here, I know my risk. If we do push and we hold, I don't know what the upside's going to be, but I have 3 levels of confirmation that have to break on the way up. And every time these levels touched, they did pull back. They held well after they broke and pulled back down for support. I was not going to sell because all 3 of my levels held. Once we broke above my last level at around 41.13 area, that's basically where my last runner was. I sold 2 more runners when we broke above that. We showed strength. That's why I was so focused on this can reverse. And one thing I was telling people, going off the historical chart setup, when we have a major dip before noon Eastern, the probability of us to continue dipping is pretty rare compared to the actual retract on the upside. The risk of us entering calls once I see trends reversing. I'm not saying, oh, we've dropped so much, I have to buy calls. I was not trying to catch this area right here. I did not care about catching calls down here. I was literally waiting this entire time for a push to happen and a pullback to show strength on a curl, strength on a higher low, buying pressure on every dip that happened. I was waiting for the initial move. I did not care about the first bounce. I never care about that because we've seen it happen. If a push happens, it can go right back to low on the day. So I will not enter in this area. I want to see it show strength and start to curl first, because that way, if I do enter around the bottom like I did here, my sell point can be the low on this curl. I'm not going to hold this to low on the day. I'm out well before low on the day contests. And if we do have a double bottom and push back up, I couldn't have predicted that, but I'm not going to hold a contract that's down 80%. I said size for 0, so I'm able to do that, but I'm not going to risk other people that may be following me. So I always try and give my stop loss is 1.00. That way, if they enter with 1 contract, they know right away, okay, if I do enter this and my stop loss hits like Ambreezy's does, I'm risking $80 on a contract that's worth $180 a piece. So I give people an idea of, if this doesn't work out, expect to lose $80. Sure enough, the contract after my entry ran the 900. So the risk hypothetically for a stop loss was 0.80, $80 a contract. My last runner that I trimmed and got filled on was 5.4. So the risk was a 0.8 loss. The reward was 5.4, which the entry of being 1.8, that is 3.6 a contract. So the reward was 3.6 for my fill. The risk was 0.8. If you do the math on that, that's about a 1-to-5 ratio of like risk to reward. If you go off the actual low on the contract after I entered, though, the lowest it dropped was 0.15 a contract. I didn't know that was going to happen. That's just what happened. Hopefully that made sense for the 2 questions that you guys just asked for Millie and Peg. And if I didn't elaborate enough, don't be scared to say like, well, like, how did you know this? Or why did you say this, but you didn't do something else? As you learn the trade, 1 minute candles, you can see inside a 5 minute. As you learn the trade, you can see 5 minute candles inside a 15-minute candle. Like, you'll just learn how it moves in the moment. You can see the 1 minute, even though you're on the 15-minute. You can see a 5 minute candle form inside the hour candle because you know how it's forming. When I'm looking at the 5 minute here, I know what this is looking like on the 1 minute. I know what this is doing. That's just how experienced I've gotten, and I track stuff very pinpoint wise. I'm very big on, I want to catch the lows for calls. I want to catch the highs for puts. And I don't chase. I don't try and catch a bottom. I just want to see trends form and then make my risk minimal. That's literally all I do. This trade could have went red. I could have lost on this trade. But out of the entire day, I'm not going to buy puts down here. I'd rather risk calls, wait for trends to reverse, enter those calls, and see if the pullback happens on the upside or the pushback. I keep saying pullback to see if the retract on the upside happens. Going off historical moves on the overall market, when we dip this heavy before noon, we typically push back upside slightly. So I could have scalped the calls. I could have done whatever I wanted, but trends were holding. The 5-minute was very bullish. I'm not going to sell my whole position because I'd rather trim runners. If I only had 2 contracts when I entered, I wouldn't have held past 5.4. My first trim, 3.6. My next trim, 5.4. I'm out of the position. So as you have more contracts, you can trim whenever you want. If you only have 1 contract, like I don't know if Rocky's in here or not, he only sized 1 contract. So he basically sold his entire position at 100% gains. He could have held for 8.0 fill, but he knew, okay, I only have 1 contract. I can't risk to hold more because if this does pull back from where I'm at right now, is it worth the idea of me holding this? He could have sold that 1 contract at 50%, 60%, but he basically followed what I said. I wanted 100% from my first trim. All levels were holding on the upside that I had charted. If it was looking weaker, I may have trimmed it 50%, 20%. How do you know there are buyers? How do you identify them? So if you're not watching the tape and you're only looking at candles, when I'm looking at candles, when you see wicks on a 5-minute, well, if in general, any type of candle, 5-minute, 1 minute, 15, hourly, a daily, if you see a wick and the candle closes like it's forming a hammer, basically. If you're seeing this, you know buyers are picking up the shares as it drops down in that interval. So if I switch this to the, I think it's the 30-minute or the hourly. Let me scroll back. Let me go to the hour. There we go. So when we're looking at this on the hourly, this reject right here is showing heavy selling pressure. That red candle with the wick right here. I can't zoom in anymore. Right here. When looking on the hourly, this is telling you we pushed up that heavy in the hour, but we sold back on the downside and people sold off. Like I'm looking at the wicks and where the candles fill at the end of that interval. If we're looking at the 15-minute, you can see these wicks show buying pressure. If we go back to the 5-minute, these wicks that I bought in at, the curl is showing buying pressure. Every time that we dipped anywhere in this zone, buyers picked up these shares. So I wanted to get in on calls as low as possible as these pullbacks happen. These 2 candles right here was my indication. If I enter right here on the white highlight, if I want to play it extremely safe, my risk is going to be a sell if these wicks right below drop, like if the wicks break on the downside. If you're not watching tape, candle formations will tell you where buyers are, where sellers are, what the setup is with a pattern, with trends, whatever that could be. So me waiting, I could have bought calls up here. I could have bought calls in the middle. My risk was I want to wait for a pullback going off the contract. I knew I could enter roughly a 1.8, 1.75 because it happened before on these pullbacks. I was using the option premium chart and then using SPX for a visual of, okay, this is curling. Buyers are stepping in because every wick on the 5-minute is getting bought up. Every time the price action hits roughly 40.97 on SPX, people buy up these shares. So I was waiting for a pullback to have lower risk on my calls. So I look at buyers when I'm not watching tape. I'm seeing the candles. As you're seeing this form right here, I'm not showing you where I got in. I'm trying to pull this back so you don't see what happened. Obviously, we know what happened after 11 Central Time, noon Eastern. But look at these candles. A heavy red pulled back up. We saw buying pressure right here. The next 2 candles, we pulled back, pushed up, pulled back, pushed up. They're red. I get that. But the lows are making higher lows on these wicks. Next candle, green. Next candle after that, green and heavy buying pressure when it pulled down. The reason this candle's like that, let me put a horizontal line. The start of the candle for the green is right here. We pulled back in this 5-minute interval down to here, and we pulled back and closed up here on the 5-minute candle. So this is showing buying pressure. When this pulled back, buyers bought it up and it sent it right back up. So when I'm seeing this form, I want to see the next 2 or 3 candles on the 5-minute drop and push back up. Next red candle, pulled back, shot back up. So at this point, I'm telling myself, if this next candle pulls back anywhere in this area where this white line is 4097 area, 4098, I want to enter calls because historically these wicks are getting bought up. If I enter on this bottom, my calls are so risk-free. Very next candle, boom, pull back, shot right back up. That's where I entered. I entered on that pullback on the wick and it shot right back up. If I would have entered and it kept dropping, I would have sold around here. The contract would have been roughly, I'd say 1.4, 1.3. My stop loss risk that I told everyone was 1.00. I want to give them an idea. Your risk could be $80 a contract. Once that candle formed and I entered, very next candle, no wick down. Now buyers are present. I'm seeing people chase this. It's pushing. Now at this point, I want to see 4104 area, this orange line right here, 4105 area. I want to see that break on the next few 5-minute candles. Very next 5-minute candle. Okay, we rejected, we pulled back, but we're still holding. Very next 5-minute candle. Okay, we had a massive push, but sellers weren't strong enough to hold it. I need to be a little careful here. There's not enough buyers to keep the momentum. Let's see what the next 5-minute candle does. Okay, now we're holding right at the zone. Buyers are heavy. The sellers aren't heavy enough for a reject to pull it back down. Next candle, still holding. No heavy push, no heavy drop. Very next 5-minute candle, heavy push to my next zone. We rejected, but buyers are still present. It held it well above my 4104 area. Next 5-minute candle. Okay, we had a heavy pullback, but buyers kept it up. We pulled back to my zone. Buyers kept it up. On the 1 minute, remember this green candle right here, heavy wick, but it was bought up. If we go back to the 1 minute now, I know what it looks like, but look what it looks like on the 1 minute. Oh, geez, I moved that. 41.12. Hang on. There we go. Look at that red candle. This 5-minute interval, 1, 2, 3, 4. Heavy pullback, pulled back up. This 5-minute interval, heavy pullback, pulled back up. I'm focused on the overall move. I'm using these candles as confirmation. Okay, buyers are stepping in, sellers are stepping in. Where is the candle going to lead to on the next interval of this time frame? As we're moving, we had a heavy pullback. We held and pushed back up. Next 5-minute candle. Okay, we're holding higher than the previous low on that 5-minute candle. Buyers are still present. Now that we're approaching this 4109 area, can we break above this resistance? Very next 5-minute candle. Okay, we wicked above, we pulled back. We're still not having enough buying pressure. Next 5-minute candle, we pulled upside, pushed upside, pulled back. Still not enough buying pressure, but the sellers are not heavy enough to sell this off. I'm not selling my contract yet. Next 5-minute candle. Okay, now we're breaking upside. Buyers are coming back. Buyers are pushing. There's not enough sellers to pull it down. Next 5-minute candle. Okay, now we're at my zone, 4113 area. Next 5-minute candle, we're back above it. Now we're above my zone. At this point, I'm watching for pullbacks to the 4109, 4112. Can those hold? And if they do hold, are the wicks being bought up on the 5-minute? Next candle, held above 4112. It wicked below, but buyers are still there. Next 5-minute, boom, push. Next 5-minute, look at the 5-minute candles now. Buyers are officially present. I am not scared at this point. All 3 of my levels broke. Any pullbacks that happen, I need to see strength. Sure enough, heavy red, heavy red, heavy red. As this is breaking down, are you going to sell because you're scared? Are you focused on the fact that, okay, we had a lot of green, a pullback is normal. Now we're forming higher lows. Here's the first low. Here's the second low. Here's the third official pullback with a higher low. Now we're pushing upside again. Heavy buying pressure, heavy buying pressure. Does that make sense? Obviously, the high right here, the contract hit 9.0. I was already out with my runners. I had one runner left that got stopped out here, and then it pushed back. My last runner with the stop loss was sold right here on this heavy pullback. Does that explanation make pretty good sense for you guys? I literally broke that down like I watched the chart in real time. That's literally how I think. That's how I watch the 5-minute candles. I'm not interested in the fact of, oh, a heavy red candle, I got to get out. I don't care about that. I am focused on, are buyers buying up these pullbacks? Are sellers keeping the stock down and buyers aren't heavy enough? That's how I know if there's buyers there when I'm not watching tape. Candles will tell you all of this. Yeah, you're welcome. You're welcome. You're welcome. Any more questions? Any more statements? I feel like that last verbal talk I just gave was probably the best one. What are your favorite patterns? So pattern wise, I love cup and handles. If you're looking at this, it's very small for a cup and handle, but it was forming that cup. I like curls. I like higher lows off trends. I like inverse head and shoulders. Head and shoulders are bearish. The inverse head and shoulder is bullish. I like setups that give me time to think. Trends are very hard to play because you have to wait for the pullbacks. But just going off patterns, I like cup and handles, inverse head and shoulders, and that's honestly probably it. This formation right here, I literally love this. When these form, I will always get calls. I will always get calls on stuff like this. Because that way, if I fill at the bottom for calls, my risk is so minimal. I will never try and chase the breakout up here. Because if I chase the breakout, imagine if we rejected the 4105 area, which is the previous higher high, and we send right back down. The IV is going to destroy me. I'm going to lose value so quick. So I'm trying to catch this curl at the bottom. I don't want to enter off the first 2 to 3 candles in the 5 minute. I want to see candles form that wick down and get bought up. So I'm waiting for the best possible risk to reward scenario. Cup and handle, inverse head and shoulder. That's basically my go-tos. What time frame do you use to look for the possible entry? So obviously I had the 1 minute pulled up for you guys. I don't trade on the 1 minute. The reason I had the 1 minute pulled up is because for new traders that don't understand how 5 minutes work in the larger frames, I can see 1 minute candles inside a 5 minute, inside of 15. When I show you this 1 minute, it's a lot more visual appealing for someone that may not understand how candles work. So when I enter contracts, I'll always enter at the lowest, the 5 minute, but my go-to for entries is usually the 15 or the 30. 15 is my go-to. The lowest I will go is the 5 minute. If I'm looking for a swing, I'll look at stocks on the 30 minute, the 1 hour, the 4 hour. But if I'm just looking for like an intraday reversal, like what happened with SPX, I'll look at the 5 minute. I'll look at the 15 minute. And sure enough, the 5 minute was perfect. But like I said earlier, for this example, for new traders, I have to have the 1 minute pulled up so that you can see on the 1 minute this curl was forming. If I just show you the 5 minute, it's kind of like, well, how do I know it's going to reverse? It's not the fact of how do I know, it's the fact of your risk is so small when you focus on this right here. All these dips were getting bought up. Every single pullback on the 5 minute was getting bought up. So that's why I showed you guys the 1 minute to start off so you can see on the 1 minute. Now, when you look at the 5 minute, you should visually see how the 1 minute was forming. In a minute, can you look at the formations and where are the vendors and buyers? Oh, in a minute, you just look at the formations and where are vendors and buyers. Yeah, so if I'm looking at the 1 minute, it's a lot easier to get scared out, but it's also easier to chase a play because you see a heavy green candle form. When I'm looking at the 1 minute, after I'm already in the play, I just want to see levels get taken out. I want to see if buyers stay in the zone that I want to see held up. I want to see if buyers stay below where I want to see a reject. So the 1 minute I only use as like, okay, where's a good zone in the moment? I'm never just looking at a chart on the 1 minute when I'm in a play. I'm always focused on at least the 5 minute as the smallest time frame. I have to keep moving back. It's getting on my nerves. There we go. So looking at this on the 5 minute, I see buyers at this supply zone. I see buyers at this support zone. Every time it pulls on the wick on the 5 minute, it gets bought up. So at that point, I'm watching this formation. I'm seeing a curl happen. I'm seeing higher lows slowly start to form on these wicks. I want to catch as low as possible a pullback for calls. Because then if I do enter here, like I said earlier, and say it keeps dropping, I'm at a lower risk compared to buying at the top, anticipating a breakout. I'm trying to catch the zone where buyers keep buying in. That way my risk is so minimal. If I would have bought the top of this formation around basically 4,100, if I would have bought calls up there, my entry on the contract would have been about 2.1, 2.15. I don't want to have to hold a contract down 10%, 20% when it's still zoning. I want to try and catch the bottom and then ride it up. That's basically what I go for. I got about 7 more minutes that I want to be here. So any more questions or statements, let me know, guys. And if not, that's totally fine. I want to make this as clear as possible. And hopefully, as I have trades that are like this, I can do Zooms and I can talk you guys through why I entered. It's hard to post screenshots of charts when I'm in the trade because a lot of stuff can reverse after I post what I feel is going to happen. And then people are going to be all like, oh, well, you said this would happen and it failed. It's easier to talk through a trade without people freaking out, because as this was forming, I wasn't really scared about anything. I was literally just holding this because I knew the chart was strong. I knew every dip buyers were there. I was not too worried. So I try and keep my alerts minimal when I call out plays, just so people are taught to hold and just trust what's happening. I'm pretty sure if I go back and check, I posted a screenshot of the levels I was watching after I entered. Yeah, so I sent a screenshot at what time was this? 1:33 Eastern. I sent that after my last level of the 4112 area broke. Once that level broke, I sent the screenshot and I told you guys all my levels have cleared. At this point, whatever happens, happens. Because I already trimmed for my 100%. I already had my first trim. So if you have two contracts and you trim one at 100%, that last contract can go to zero. You're guaranteed to break even. But if you're smart, put a stop loss at break even at least. Overall on that trade, you just made 100%. Overall for the position, you made 50% return based off what you put in. So I'm trying to be calm, but explain stuff in a calm basis when I enter stuff. Yeah, you're welcome for the breakdown. I'll try and do this as much as possible. Even when I have losses, I will also try and do these and break down how, like, what made me sell, why the chart failed. I will break down losses as well if they're that, like, exposure wise that I can show stuff. If it's just like I entered and nothing happened, I can't really review what I saw because it never happened. So on major losses with the chart, not just percent loss, but just like the chart reverses on me that I wasn't expecting, but I prepared for the loss, I will also break those down for you guys. If I use SPY, would it be the same to analyze? Yeah, so SPY and SPX move in correlation. Let me pull up the SPY chart and you'll see how it basically did the same exact thing. So here's the 5-minute right here, and here's that same curl. SPY can do the same thing. Contracts are cheaper. The setups will all be the same. So the wicks were there. You could have bought in. They rode this up. Pullbacks were not as heavy as SPX along the way. But yeah, any setup that you see with SPX, it should be the exact same on SPY. Almost a mirrored image. They move the same. It's just price action is different numbers, obviously. Yeah, any more questions? I feel like I broke that down as good as I possibly could from my knowledge. Someone else may know more than me that they could say stuff, but that's basically from start to finish, that's how I played that out. I couldn't have done anything better because literally I had a stop loss for my last runner. I wanted 10 for a sell. The high was 9. I'm not upset about that. Luckily, I had no contracts sell for red. All contracts were in green. One at 100%, two at 200%. My last one sold at about 15% gains. Appreciate it, Perez. Yeah, I'm going to stop the recording, but I'll stay here for a second. It's not the same in TOS. I don't see the same wick. TOS. Let me pull TOS up on my phone real quick while I'm still recording, and I can see what I see on the chart. I gotta sign back in. Oh, geez. Millie, if you're able to, send me a screenshot of the SPY chart in trade discussion in Rippy Global, or just any place you can send it through DM, whatever it could be, and I'll look at it for you after this. I have to sign back into my TOS because I haven't used it in like, I think 5 months or so. Let me stop recording.